All right, we are live. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is number 104. Sorry we are late. We are 3 minutes late, but we are here. Matt Money should be here soon. And if he's not going to show up to work, then it'll just be me and Vince this week doing what we got to do. Arnie's definitely not making it today. He's busy, so it's going to be me, Vince, and Matt. And maybe we'll put the link in the chat and get some people to come on if they have any audience questions and go from there. Before we get into everything Palantir related, Vince, how was your week in general in life and in the markets?
Oh, that's a tough question. So life was pretty tough. I have a sick baby and a sick wife. They're coming out of it. So this week was a lot of working from home and not getting a lot done. The markets were really, really boring. Where's the mooning everyone was talking about? And then on top of it, this Bitcoin was, I'm not into Bitcoin, but I was sure that Bitcoin would like moon after the ETF. And then what the heck?
It sold off. It was a fucking sell the news. It wasn't a moon, unfortunately. Not yet, at least.
So. Yeah. That's very curious to me because, that doesn't make sense. I mean, to open the ETF, like the money has to flow in and they have to buy the Bitcoin. So, and how do you, because the only explanation is that the people front run it, right? And then I'm like, how do you front run the ETF if the grandmas don't have any other way other than the ETF to buy Bitcoin? I don't know.
It was a very interesting week, especially as someone who thought that, it would go to the moon. It did go to 49,000, but I think given it's up, 70% in the past 3 months, maybe that was the run up and we all missed it if we didn't get in, in September or before that.
Yeah.
Life-wise, I was sick 2 weeks ago. Chris has been sick all week. That's why he's been gone from YouTube. So I think everyone at this point is getting sick. Let us know in the chat if you've gotten your annual winter sickness done or if it's not here yet, because I think all of us eventually go through it at least once.
Yeah, and what's interesting that 2 years ago, this annual sickness was called COVID, and all the 100 years before it was called the winter flu, and now it's again the winter flu. So I'm happy that it's like that, but yeah,
it's definitely been. Chris for sure has the flu, so a lot of shit's been going down. All right, let's get into Palantir. A lot of stuff to talk about this week. A lot of different things happened. I think we'll start off with I think we'll do. Well, there's a couple topics I had. Obviously, we got to talk about Israel. I wanted to talk about that, but there was one before I wanted to get into Israel that I wanted to. Oh, yes. Okay. So this one, the Options Care healthcare contract. Let's talk about that one. And then we'll get into Israel. We got a lot of stuff to talk about, but they had a partnership this week. This was their first PR of 2024. And it was a very interesting partnership. This partnership here was January 8th, 2024. Option Care Health, a public company, $5 billion company. I think they've done $4 billion TTM in revenue, has partnered with Palantir primarily for AIP. Essentially kind of think of them as DoorDash for home infusion services. And they're one of the largest leaders in about $40 billion TAM that is home infusion services, using AIP to enhance patient experience, focus on optimizing clinical outcomes, streamlining processes, enhancing our expertise, all the good stuff that Palantir uses with AIP. Karp said, Option Care Health is the leading edge of deploying AI across the healthcare sector. We are proud to support this effort, which builds on our expanding presence and commitment to the medical sector, and we will expedite and improve services to patients across the country. Any thoughts on this being the first partnership of 2024 and sort of overall thoughts of us continuing to expand in the healthcare space?
Yeah, my thoughts are that, one, it's amazing. Two is that Arnie posted that the AI growth in healthcare is expected to have a higher CAGR than even just the AI growth. I think it was like an 85% per year.
Yeah.
And I'm wondering about something, because is there any other competitor to Palantir in this healthcare thing? Because it's starting to become like, if there isn't, then Palantir is becoming sort of a monopoly, because we are always saying that like Palantir went from something like 0 to 16% of the US hospital beds being run by Palantir, right?
Correct.
But is there a statistic that says that like how, because in my opinion, the rest of the 84 beds that are not Palantir yet, they are not being run by anything, or they're being run by, you know, homegrown Excel or, you know, very archaic systems. So like out of the ones that are being run by AI, how much of that market does Palantir actually have? Because I would guess it's something like 80 to 90%, if they even have a competitor, right?
Right.
And that is that is monopolistic numbers right there.
Yeah, it's really exciting. I mean, the healthcare vertical, I think we've all been very, very excited for in terms of the things they can do. And there's a lot of partnerships they've done in healthcare, whether it's academic institutions, you got your Cleveland Clinics, Tampa Bay General Hospitals, then you have the actual hospitals, the Policio Geminili, which I just butchered the word, but that was in Italy. And then you've got then you've also got the not only Option Care Health, but the medical supply chain companies like Concordance and Cardinal Health. So this partnership was really interesting for me because it seems like their vertical to expand in the beginning days of them becoming a major tech company is healthcare. Like you don't have that many verticals when you're a small tech company, right? Like you have to kind of double down. Like for YouTube, I remember in 2010 when they were getting started, it was pranks. They were really promoting the pranksters because the pranksters was just the viral content on the internet. And they knew that if they could get people onto YouTube, then they could get them into the other types of content, but they were pushing the pranks. And then the pranks got boring and the pranks died out, but they zeroed in on that niche to really build, you know, the user base of YouTube in the early days about a decade ago. Do you kind of think healthcare is the right vertical for them to start going in on, given that 0 to 16% growth we've seen in like the past 5 years, that this is the thing investors should kind of be backing them on?
How do I answer that? I mean, I think that what's fantastic with Palantir is that they're into so many verticals and they have planted so many seeds. And I think that this is just one of them that happens to blow up. Like somehow it's an area where there isn't any other competitors, not that I know of, at least. And it seems to be very easy to implement. I guess very easy to present the use case, and yeah, that's what we are seeing. And I think that there will be, I think how investors should look at it more is that this could be like a preview of other industries that can come in the future.
Yeah, I agree. Look, we have Son Train in the chat. Healthcare would be number one for Palantir. I think there's healthcare, energy, and then defense. Like those are the major three verticals. Energy, and those are the three that we've seen a lot of different partnerships in. Like, and we can list all the partnerships in those verticals. Defense is its own business, and that's like a sector we've got to dominate, and I think we will dominate over the next 10 years. Energy, I think, is a massive industry, but healthcare is just so obvious because like healthcare is such a data-driven system in terms of all the different things that need to have use cases, and it's so obvious when you go to a hospital or when you bring a hospital into a boot camp of just like how they can optimize you. The HCA healthcare partnership, we didn't talk about that one. I mean, that one at AIPCon was just massive. That to me signals that this is a vertical I think they've strategically decided is the vertical to pursue. And if it is the vertical that opens doors to other verticals because it just shows the template of how to expand in an industry, then I don't think that's the worst thing in the world. I mean, that in and of itself could get them higher top line revenue growth if they kind of go all in on that, even though I know they're trying to be multifaceted. But if that's the one that works, then that's the one that works.
Yeah, I mean, healthcare, as Carp says, it's a very litigious area, very like very separate data sets and very archaic. So it's kind of it's a match made in heaven for Palantir, actually.
Yeah, 100%. And I think it's a really, really interesting one. Let me just play this clip. This is from a year ago, but this is Shyam Sankar talking about Palantir's relationship to healthcare. And I just want to play this so everyone can see it, given we're talking about it.
Not yet shared.
Oops, sorry. I thought it was sharing it. There we go.
Coming off of a low base, but there's a lot of potential. First, COVID, I know, is big for you in terms of managing some of the government's work on vaccines and medications, and now monkeypox. Tell us about it.
Well, thanks for having me back, Sarah. Absolutely. You know, one of the things that makes our presence in healthcare unique is that we span the entire value chain. So, of course, working with government agencies to help them distribute vaccines efficiently, plugging into the pharma companies and the biomanufacturing processes that create them, driving the hospital operations that is getting those needles into your arms and driving the healthcare outcomes, clearing the backlog in the wake of COVID.
Why should investors care about this? I talked to our team actually reached out to a number of analysts, ahead of today, wondering about the healthcare business, and they said it's still such a tiny slice. Clearly, there's growth there. How big of a part of the business do you intend it to be?
I think healthcare is absolutely massive. The number of opportunities that we're seeing to help the U.S. clear the patient backlog with hospital operations, to deal with nursing shortages. COVID really put healthcare on its knees here. It showed the weaknesses in the system. It spurred innovation. It's created funding to go after and fix these problems. That's as true in the U.S. as it is in the U.K., in Canada, in continental Europe, in Japan. And so we see a lot of opportunity all the way from the preclinical, clinical R&D side through clinical trials, all the way to the payer and provider side.
Broadly, what is happening beyond healthcare, Sean, with the government business? You were expecting all these deals to.
So, I mean, obviously it's a massive, massive world, and Palantir has been looking at that for a long time. Another, really interesting piece of news, NHS tweeted this today. New data shows more people were treated in November than ever before. I don't know if Palantir software is integrated fully yet, and that made it happen, but that's definitely good to see. Despite winter pressures, waiting lists fell in November, and it was a record month for diagnostic tests and cancer diagnoses. December also saw faster ambulance response times.
Sounds like the things that Palantir does.
I mean, yeah. I mean, why would it happen randomly in December, right?
Like It's true. Because if you look at all what are all the other Palantir customers saying, like waiting times fell, we're serving more patients, and this very much sounds like that.
Yeah, no, I definitely think it is related by Palantir, and so we are seeing a lot more momentum from Palantir in the healthcare sector. Okay, so let's move on now to the big news of the week, which was the Israel news. Yeah. So I guess before I get into it, what were your raw thoughts on the news that came out from Israel? And then I'll get into the actual stuff we saw.
I mean, my raw thoughts were that I'm 100% that Carp is giving away yet again a service for free in Palantir. And I'm sure that some people are going to be triggered by that. Some people are going to be pissed. But this is what Palantir has been doing since its inception. And this is how they got to where they are. And the only reason why they can do it is because they're so sure that the product is going to give value that they can afford to get paid later. And for example, in the NHS case, it took from 2020 to 2023 to get the contract. I have a feeling that in Israel's case, it will be much faster. I mean, in Ukraine, that's also very interesting. Arnie mentioned somewhere that they're still working for free. And I don't know, do you know anything about that? If they're still working for free in Ukraine after, 2 years now?
So I don't think they're working. They have a strategic partnership with the Ministry of Digital Transformation, which definitely I don't think is free. In terms of the actual government, like Zelensky, and if they're paying,
like on the battlefield,
dude,
because we know that they got the contract to rebuild Ukraine, right? But they're still in the destroying Ukraine part first. They're not at the rebuilding part yet.
Dude, if it's 2 years later and we're not getting paid,
I mean, it was Arnie's post, so I washed my hands, but I think in Israel it will be a lot faster to get them paid, but it's going to be a period that this might cause the gross margins to go down a little bit, but in the end, it's for potentially a quite big contract, so I'm okay with it.
Yeah, I mean, look, at the end of the day, I think it's the right thing to do, and I think they eventually will get paid. Also, they need to continue to get NATO clients, and we'll talk more about Israel in a second, but I think part of getting more NATO clients is showing NATO that we're not backing down from helping Western allies. And a lot of those Western allies, I mean, they happen to be, the Israel, Ukrainians of the world, and so if we give it to them for free, there's probably more money in the future waiting for us when it comes to securing more government contracts. Okay, so Israel stuff. A bunch of things to talk about. Sachin, we got you in the chat. I'm putting the StreamYard in the chat. If you're free, we'd love to have you on, and you can come and join and talk to us. Me and Sachin will probably do a one-on-one before earnings as well. But Sachin, if you're free, you're welcome to join. So a lot of interesting stuff happened with Israel this week. Okay, this quote was really the highlight of the week. This strategic partnership aims to significantly aid the Israeli Ministry of Defense in addressing the current situation in Israel. So you got Teal and Karp right there with officials in the IDF. working together officially with the Israeli army. Now, all of us thought this was happening. All of us were speculating that this was happening. But we finally got a word from Tel Aviv as they had their annual board meeting that they were there, and it is indeed happening, which means Israel has a $25 billion defense budget. I don't know if we're giving the software to them for free, but even if we are, obviously we talked about how that would inevitably be good for business. I don't think we are, given they do have the money to afford it, but we'll get more clarity on
that. And they have used Palantir before.
And they've used Palantir before. Yeah. Right, since 2014, and they've been around. They've been in Tel Aviv since 2014 as well. Some interesting quotes that Karp said on talent in Israel. He says, "I am pretty encouraged about the talent here, and we are getting the best people. What I see in Israel is the hybrid of talent that is qualitative and argumentative. It is particularly valuable on the tech side." And then on being pro-Israel, and this is the tweet I wanted to, not the tweet, the quote I wanted to analyze. I wish Karp had a Twitter, because if he did, that would be very fun. But he says, "I think so few people speak out because they believe they can skirt by with no opinion, but there is no one who doesn't have an opinion on Israel, especially if you are a big company. There are a lot of people in the industry who are maybe not as pro-Israel as I am, but they think of Israel as a very special place and are generally more understanding of the Israeli position and view Israel's accomplishments of building a nation from a desert. But they somehow believe that the safe position is to say nothing. Among the reasons for bringing Palantir's board to Israel," Karp said, "is to embarrass other people who are pro-Israel in private, but somehow not in public." Any thoughts of how explicit Karp was about being pro-Israel and basically trying to embarrass other companies that didn't want to embrace their pro-Israelness?
On this one, I don't have so much thoughts. I mean, he must be talking about defense companies, right? Because it wouldn't make any sense that Facebook or I don't know, Google would move their board meeting to Israel. I feel that would just be pandering. But on the defense companies, definitely. And this is his job, right? Like he is known for someone who is not going to bend his knees because of pressure. Like they stand by their principles, and this is sort of their brand. And I think this is very needed to get other NATO countries. So this reaction was very expected, and I think it's the Karp that we know.
Yeah, look, in my opinion, I think this is ruthless by Karp, because his basic argument, and I kind of was thinking about it today, right? I was trying to analyze it. He was like, most companies are pro-Israel because they're definitely not pro-Hamas.
Yeah,
right.
Yeah.
It's like Snowflake's not pro-Hamas, but Slootman's not going to say that because he's scared, right? Or he doesn't want to have the political ramifications of that. Sundar Pichai is definitely not saying that shit, So if companies are not going to comment on this, Karp's argument about making them feel bad, to me as a shareholder, it begs the question about, do we care about companies feeling bad, or do we care about making money? And what are the implications of us being so pro-Israel on if it's going to actually help us make money? And at the same time, wow, we have Matt Money join and we have Sachin join. So that's great. We got a full crowd.
Sachin's in the club, though.
Sachin's in the club. Yeah, we got background noise on Sachin.
Looking good, brother. I haven't seen you in a while.
Let me mute.
Yeah, so Sachin, we'll start with you. We'll get you, even if it's the background noise, that's okay. It's not a big deal. What are your thoughts on the recent developments with Israel and that we're officially supporting them? You can just, the background noise is fine. It's good.
I think it's. I think without getting any political, I think the key thing here is that, see, Palantir has made it clear several times that they are aligned with US policies and NATO policies in general. They are just going along with that. I mean, there is nothing to be surprised here. And it's good or bad. I think the people who don't want Palantir, they're already out of Palantir. So it's positive for people who believe in the mission. And for everything else, another issue to make drumbeat. I think that's all.
Okay, that's fair. Matt, you came in right when we were talking about Israel. Obviously, partnership with the IDF. Raw thoughts on that, and overall, I mean, how do you feel about Karp being so explicit that he wants to embarrass other countries about not speaking about Israel?
Yeah, I wish he let me go first instead of Sachin, because he pretty much took the words out of my mouth. I don't want to get political, but I think it goes right along with what Palantir's been talking about, right? Western success and doing everything that they can. So it would be surprising that they would do a 180. And maybe if you think about it, we all would be scratching our heads, if they went to go work for the Houthis, right? So it's kind of just alignment with what you would expect them to do. So it is what it is. And at the end of the day, I don't want war, but at the same time, if there is going to be war, it's understandable that Palantir is siding with the folks that align with US. So it's just an unfortunate time. I don't like seeing war, just like I didn't like seeing the whole Ukraine-Russia thing go down as well. But I anticipate it's not going to stop, right? I think this is just a continued escalation, and I think we'll also, as we've talked about in the past 6 months as well, we'll probably end up having to see us come to the support of Taiwan as well. So I wouldn't be surprised if within the next 6 months to a year, we're having this discussion again about Taiwan and CARP and the board going over there as well. Well,
that is fair. While we have you here, Sachin, we'll let you do this last one, then you can leave. Your thoughts on the Option Care Health partnership? You can do that one, and then we'll get you out of here.
So 3 things here, Amit. The first thing is that the healthcare portion of business that has got several partnership, and we are seeing that. It's just a stream; it will not stop. Option Care is just one deal now, and I expect more and more people to come in. The reason is that I think Chris has discussed this several times, that how inefficient the healthcare sector in terms of admin and other things. Okay, we have seen what happened during the NHS time as well, and how much NHS is doing now after the deal. So yeah, I think it's just reaffirming that when it comes to healthcare, data, digital, AIP, I think they are the proven partner. That is one. The second part is that so you see the number of deals that are happening and the size of the deals. While if you see other companies in the space, for example, like from there is.
And we lost him.
Yeah, we lost him. He'll probably come back in.
If you see that the stock of whatever action happened in the last few days, I think it is pretty much holding at 15.5, 16 pretty well. While many stocks have, declined beyond comfortable level. So I think market is expecting a very stellar earnings, and we saw what happened last time. If earnings are equally good or even slightly better at this particular point, at least for the near term, I would expect whipsaw action towards upside in Palantir before it settles down again for a range until next earnings. Back to you guys.
Okay. Sachin, we'll get you out of here now. Thank you. And I'll make sure to hit you up for our one-on-one interview before the earnings. Thank you.
It was great to see you.
Okay. Great to see you.
Okay. Matt, let's get your thoughts on the Option Care partnership. Obviously, another healthcare partnership with AIP. It's pretty cool.
Just continue to establish presence. I didn't watch those videos, so unfortunately, I don't have as much. I think I saw that Option Healthcare was one of those videos, or was it one of the new partnerships they announced this week?
It's one of the new. I'm actually going to play one of those videos, but yeah, it's one of the new partnerships. Yeah.
Okay. Yeah. So I don't have too much to say other than just when you see more and more healthcare, I just kind of shrug. I'm like, okay, makes sense. I'll continue dominance, and I think that's just. And I saw one of the comments as well. I wanted to comment specifically on that, and what it was basically said, like, when is Palantir going to start charging for some of these things? And to me, I think it goes back to, whether you're into the company for a short amount of time, or whether you're into it for it being a 200, 300, potentially even half $500 billion company. And to me, I'd rather become a go-to software machine that everyone understands is the premier company that gets displayed on every sort of theater and every sort of industry and every sort of vertical that you can, and then really start to slowly crank it up. Because if you're in every single person's company, and then you can straight up just say, okay, well, we're just going to increase prices 10% per year, then you have a great company that you can be involved in, right? So, you grow your customer count by 10% per year, you grow your revenue by 10% per year, then it's going to be a great company, 20% return just on that in terms of revenue growth. And then if you start buying back stock, it's going to be at the end of the day a good returning company. So I think sometimes people are trying to get to the end too quickly, and I think what Palantir's success will be is making sure that they provide the value, and then making sure that the West succeeds, and then overall, in the end, it'll end up being a very huge economic success, as we've already started to see. Right, no debt, $3.8 billion in the balance sheet. They're going to probably close out the year with closer to $4 billion on the balance sheet, and hopefully a restart to revenue growth as well. Sorry, I don't have much on the options.
No, it's okay. It's okay. Let's bring in one of our favorite friends of the channel, who is going to help us do a segment that I just made up on the spot because he wants to do it. Technical trader Wong, you are going to get.
So, guys,
what's up, man? You're going to get to show off your talents on technical analysis. So,
no, I do. Sorry, I don't have any talents.
No. Wong. You have a channel called Technical Trader Wong. You obviously have some talents, way more than the rest of us, when it comes to technical analysis. So, give us some technical analysis on where the stock is going to go, when we should be theoretically buying, not buying because it's not financial advice, but theoretically looking to buy. And can you explain some of the terms that we're looking at here as well?
Okay, so I think what I'm seeing right now with Palantir stock is a possible reversion or reversal. So you see, I have a cup resistance level. So this is where a lot of the insiders sold. I think around last year. So that caused this downtrend. And what we are seeing right now is a sort of formation of a reversal, right? So we have this red candle, and it's moving into the green. So that theoretically signals a reversal. We also have other things that come into it as well. We have that MACD. MACD is pretty much in the red right now, but you can see what happens when the MACD decays towards that pink. And I don't know if we'll see that today, or rather, I don't know if we'll see that the next trading day or the next week, because there are a lot of things in the economy that is still waiting for confirmation, especially on earnings, to see where the actual economy is heading. I think the banks are going to tell us a lot of that. And yeah, so my question right now to all you guys who are very, very deep in fundamentals, is there any industries that Palantir is not able to get into, right?
Okay, but before we answer that question, what is the MACD? Is that like Mickey D's? That's like McDonald's or something?
I have no idea. Okay, no, it's the moving average convergence and divergence.
Okay, what the fuck does that mean, like in layman terms?
Well, okay, very simple terms is that you are supposed to look for divergences. So let me see if I can find a very simple example here.
You want to buy low and then sell high. That's
theoretically.
I'm just kidding.
But a divergence is like a you mean like I know what the word means, but what does it mean technically when a stock diverges? Like from its normal trading pattern, basically, is what you're saying?
Well, I didn't come prepared for that, but
I think it has to do with moving averages.
Yeah, something like that. Well, I'll tell you what I know. I know how to read the ruler. I don't know how a ruler is made, right? So
that's fair. That's good. That's right. Okay, go ahead.
And yeah, so I mean, very simply, what we are seeing right now is that we are seeing a starting of a formation of a divergence here, and you'll see that the MACD is still in the red, and then we have sort of a moving up on the price, right? So that is theoretically a bullish signal. So yeah, we have that, and then the RSI, you can see that it bounced off this around 50 midpoint. So it does look like we are about to reverse, but once again, this is not confirmed. If the market tanks next week, then Palantir is not going to be what would you call it, absent from that, right? Palantir is going to tank with the overall market.
Right. So I guess that's why it's good to be a long-term investor, because we'll just see what ends up happening. But all right, that's it. Thank you, Wong. Appreciate it. In terms of any industries Palantir can't get to, any thoughts on that, Vince? Any industries we can't necessarily penetrate as well as we could?
I mean, I would honestly think that industries that are, because like, where does Palantir dominate? It's like where you have a lot of legal, a lot of moving parts, maybe governments involved, so it's slow moving. So I would think that small mom and pop shops, those would be the harder industries for Palantir to dominate. And I'm not saying it can't get into it, but it's very interesting that defense is very complicated, lots of government, lots of laws, lots of separate data sets involved. Healthcare is similar. Energy also very, very similar. And these are the ones that Palantir like really excels in. And then the easier use cases where, the snowflakes, the Excels, the pre-made thin programs can go in. I guess that's a bit harder for Palantir.
Matt, any thoughts on verticals that are harder for us to penetrate? We got energy, defense, healthcare, manufacturing.
Maybe music, I think, is one that I've yet to really think about a use case for. I think education could work. I'm trying to think. I agree with the small mom and pop piece. I think without a large infrastructure data set, unless you're selling millions upon millions of merchandise per year, I think it's going to be pretty tough to justify. And I don't think a lot of those guys want to be on the cloud either. So it's going to be difficult. But I do want to think, actually note this is, it's pretty interesting to listen to a snippet from the All In podcast where they were talking specifically about what some good verticals are for 2024. And they mentioned uranium being one. And I know a lot of people pushing into that. I don't know if I'm probably going to stay away from that, but I know a lot of other people that are starting to dabble in that specifically. And then they also mentioned cloud providers that are cloud assistants that allow you to create low code or no code sort of programs that really have AI assistance. So I would anticipate that Palantir is within that realm. I would anticipate Microsoft is within that realm, and really just going after like software as a service, because basically if you're able to create a piece of software that they're charging $3,000, $4,000, $5,000 per license, and you can kind of create no code, low code sort of opportunities and combine that with your cloud services business and kind of get rid of some of these legacy programs and applications that you've been having in your company that, let's say, Bill created in 1994, and then they just keep passing it down and nobody can update it, which I've seen plenty of that at UDoc that has now kind of gone away with the implementation of Palantir. I think your company is going to take away. So if you have something like that, like these old VBA workbooks within your organization, Visual Basic for you, Amit, in Excel, that would probably be able to be replaced by a Palantir, but you have to have enough revenue to justify it. So I agree with Vince with respect to smaller companies not being able to utilize it. But music, I think, as well. Trying to think of a use case for it.
Okay. Thank you, Wong, for being on. Appreciate you, man.
Hey guys.
You're the man, Wong.
Bye.
This was a good question in the chat that I wanna give it to you both because you guys are the experts here. Or Vince, you said Palantir could help Rocket Lab. Let's do a 5-minute segment on that, and we've got one video, and then we'll end it out. How do you think Palantir could actually help Rocket Lab? Why would Rocket Lab pay for Palantir software?
I mean, this is again an area where you have a lot of data that needs to be analyzed for critical decisions. I don't know if they're helping Rocket Lab, and the reason why I commented that is because someone commented that would be a match made in heaven, and yes, I agree. I mean, Rocket Lab is also part in defense, so I wouldn't be very surprised if Rocket Lab wouldn't already be using Palantir in some way.
Yeah, I think I want to build on that. So specifically, if you need that IL-6 sort of capability that Rocket Lab is really delving into within, now they're getting 2 contracts, one of which being the Department of Defense with respect to the HASTE contracts, which is kind of their suborbital rockets that might be used for intergalactic or intercontinental ballistic missiles or just self-defense or whatever you choose to use the HASTE contracts for. And then second, the Space Force contract for the Space Defense Agency or Space Development Agency. I think that is also a government entity. So being able to get IL6 sort of certified might be allowing them to create applications that could work collectively between the government, making a dashboard that can look at all their interconnected 18 vehicles that they're going to be making from 2027 to 2030. Rocket Lab did explicitly say they're going to make that in-house, but that doesn't necessarily mean it couldn't be built on Foundry or a Gotham sort of dashboard that allows people to make decisions, right? And I think there's a possibility of that, and I have been thinking about it quite a bit. At the moment, I don't have an answer though, but I could definitely see the inner workings as to why, if you have 18 disparate sort of facilities that are floating, that have different telemetries, that have different coverage, that all can be fed into one dashboard to make decisions. And then also, Rocket Lab is also talking about creating its sort of own, not necessarily Starlink per se, but they're looking for something of a Starlink sort of nature. And so if that's the case, they load up and put up 200, 300 different satellites that is going to be used for a different thing. I mean, I'm sure you need an expansive network that talks to each other, and having all that 200, 300 different satellites being able to be in communication with each other would be very difficult without a great engine or operating system like Foundry or Gotham could provide. So, and also being in the edge, right? Being a satellite, having that Apollo piece, and being able to connect out to them and be able to have a little bit more connectivity and understanding, hey, what do we actually need to update for the systems on the ground versus what do we need to update for the edge systems that are up in the satellite piece? So all of which I think would play beautifully.
And also, even let's not forget, making rockets is a very complicated supply chain issue. And they are, making rockets and satellites on 2 different continents, in 2 different hemispheres, because they're half in New Zealand, half in the US. So yeah, I think I wouldn't be surprised at all if Rocket Lab would be using Palantir already.
I think it would be very exciting. Obviously Rocket Lab is the company that a lot of people think could be the, I don't want to say next SpaceX, but it's in the space area. And go ahead, Vince.
Better
than SpaceX. Okay.
I mean, in terms of growth, possibly, yes, because, SpaceX is so big already and Rocket Lab is so tiny that, even if SpaceX grows 5x, but Rocket Lab grows like 50x, it will still be very minute compared to SpaceX.
Yeah, SpaceX 5x that's almost $1 trillion. Rocket Lab would be 100 billion if they 50x, basically.
Yeah,
pretty much. Yep.
And I just wanted to say, Amit, you seem to be like a closet Rocket Lab bull. I see your comments somewhere. And
well, why don't we do a little segment on this, dude? Let's take 5 minutes. Give me the bull case, because I'm not a bull, because I'm thinking like it's gonna take a long time for this space thing to play out, and government contracts and all this stuff. Like, it's very risky.
Same as Palantir, government contracts, long time.
Yeah, but Palantir's been working with the government for 20 years, right? So they've established themselves. What if the rocket fails? Like, give me a good bull case for 5 minutes. The most simplest bull case for why Rocket Lab at $2 billion is worth.
So I'll give you 2 options, and then I'm curious what Vince says. You can either invest now and I think get a very secure 5x investment. Yes, there's a 20% chance that this thing fails for sure. Right. To me, it continues to shrink day by day.
But how'd you get to 20%? I know it's a guess.
Just a gut feeling, right? So they've already launched over 40 vehicles into space. Their small launch vehicle. They've also stated being able to have a small launch vehicle like that is almost more difficult than creating sort of a medium launch vehicle, because you're trying to make sure that it maximizes efficiency, versus a medium-sized launch vehicle. You can just throw more and more engines on it, and be able to succeed with that. So there's that piece. They already have a successful business from a solar panel business, which has been included in SpaceX missions / NASA missions. They have had successful trials for some of the materials that they're going to be using in their medium launch business. So, I just think that 20% is continuing to shrink and shrink and shrink. Yes, there's a possibility that some black swan event comes around and, takes them out. But getting back to what I wanted to state, to me, Amit, I see 2 visions for you. I see you invest today, you say, F it. Yes, there's this 20% risk that it goes belly up. You get in at 2.5, $2.6 billion market cap. To me, I think with what we know today, it's easily a $10 to $12 billion company within the next 5 to 10 years. So that's a 5x for you. With the path that we're going, I could see it getting to 50 billion. I see the second path for you being a wait, say 6 months to a year, get a little bit more, I guess, risk flushed out of the system, whether that's capital exposure risk, whether that's understanding whether or not Neutron, which is their medium launch vehicle, is on the path towards launching this year or next, waiting for a few more contracts to come in. There's a few more things that really could flush out. And I say within the next 6 to 12 months, a lot of that risk is going to be flushed out of the system. So at that point, I feel like it'll still probably be a $5-6 billion company after some of that stuff has been flushed out. So I think the stock will probably be trading at $8, $9, $10 once some of those risks have kind of been mitigated or flushed out of the system. And at that point, you're still looking at a 2 to 3x if it goes to 10, 12 billion. But to me, at that point, if a lot of that stuff is flushed out of the system, you're well on your way to looking at a $25 to $50 billion organization. In that case, you're still looking at a 5 to 10x at that point. I do see a path where this goes between 50 to 75 billion. And if it continues down and the space industry is way more expensive and we do get the space equipment business up and running better than expected, I could see a place where it's a 75 to $100 billion company. But at the moment, I struggle to, with what I know, get north of 50 billion until we get more under our pocket. But I see not just you, Amit, I stated that as 2 entry points because I think explicitly most people need to think about that. Yes, there's more risk today. If you wait 6 to 12 months, a lot of that risk will, I think, be off the sheet. And you'll be able to understand, yes, you might lose out on a little bit of upside, but you'll lower a lot more of your risk exposure as well.
So you think at this price, it's actually not a horrible gamble right now?
I think it's lower. The valuation today is lower than when Palantir was at 6.
Really?
I think. Yeah, like if you
Like
do
the risk to reward.
Yeah, like I think that there's
let's put sorry, I let me speak. I'll let you speak. Sorry.
No, go ahead, Matt,
please.
No, so yeah, I think that the reason why I'm so bullish on this company, I always talk about this, is because of this book that I read, Ashley Vance, When the Heavens Went to Sail, and it explains why there is a boom in the space industry now. And it follows certain companies, for years. Actually, the writer is with the companies, and you get to read the beginning history of Rocket Lab. And it's a founder-led company where they have basically already climbed the Mount Everest. Like nobody thought that they would be as big as they are. The founder is unbelievable. I don't have any words for any other words for Peter Beck. Brilliant businessman. And they have recently gotten, certain contracts. They are in the bidding for other contracts that takes a lot of the risk out of the business. So I think that the market completely misunderstands this company. They have like a view of what the company is, but it's not what it is in reality. And I think that the stock is crazy undervalued at the current price.
Yeah, I think the one thing I was going to jump in on there, Vince, which you kind of touched on, but I want to deepen, is the fact that Space Force has selected Rocket Lab as kind of one of the prime contractors for their future space systems. These 18 vehicles out of the 54 that they're going to be sending to space is huge. It is looking for a contract between 2027 and 2030, which means the Space Force actually thinks that they're going to be around by 2027, 2030. Otherwise, they wouldn't be doing this work with them, right? So that's a huge piece of confidence and a lot of due diligence that I personally haven't been able to do, but they've been able to go in and say, yeah, we think you guys are going to be around, right? We'll be more than happy to give you $500 million, which is at the moment 2.5 times your current revenue on an annual basis, to be able to supply this contract for us. And so I don't think people fully understand or understand the gravitas associated with a contract like that and where that will propel Rocket Lab being. And then also keeping in mind, yes, they are sending currently on a path to between Mars and Jupiter with the Psyche mission with SpaceX and NASA. Within the next year or two, they're going to be going to Venus and they're going to have one of their satellites be going to Venus. They're going to help put stuff.
They have a satellite go to Venus?
They're going to Venus on a private mission. They have another mission to Mars. They're helping Firefly with the lunar lander and the operating system that's going onto the lunar lander for the moon. So you have to think, like, these aren't small tasks, and this isn't just a launch company like what we're seeing with SpaceX, right? This is solar systems. This is actual satellites being developed. This is star trackers. These are all these different conglomerate of components that need to be put into the space place. So when you're looking at it, what they're looking at is an end-to-end space company where you say, we need satellites, and Rocket Lab's going to be like, okay, cool. We can launch it. We can build the satellite. What exactly do you need us to do? Because we literally have from this end to this end the ability to do whatever you want. So truly vertically integrated, and it's really interesting to see. And I don't think there's another company out there at the moment that has that capability to go from end to literally end, right? You might have a Black Sky. You might have some of these other companies that create satellites or parts of satellites or solar panels, but nobody that really goes from, hey, the very initial components to the satellites themselves, to the operating system of the satellites, to actually launching the satellites into space. And that's why I'm so bullish on Rocket Lab.
Okay, very cool. Is this Rocket Lab Weekly or Palantir Weekly? It's a mixture of both.
I was going to say, Matt, save some for later for Rocket Lab Weekly.
Yeah, shout out to Rocket Lab Weekly as well. Vince's channel is in the description, and Matt's. They both do podcasts every Saturday on Rocket Lab. So,
okay. Last thing about Rocket Lab, just one sentence. I'm surprised by how many Palantir investors are also into Rocket Lab. Like, we see it in the comments on Rocket Lab Weekly. It's really interesting how the same kind of people gravitate to the same sort of stocks. But I want to raise the topic, guys. So I was looking at the chart of Palantir, and we have been in the same place since June last year. And so that means that the price has not moved a cent since June 2023. And I feel like the company has been executing. And is this a buying opportunity? Or, because we always have this, like, you always ask us, like, is it overvalued? Is it undervalued? And we are coming into this very interesting place that we have a company that is executing, and the stock price is going this way.
Is it overvalued or undervalued right now? All right, so it's what, 1660? I think. Well, 15 has been my buy price for a long time. I've said that very publicly. I think even at 15, it's a little bit of a rich valuation. That's basically 34 billion. We're going to maybe do 2.6 billion in revenue. Hopefully we're at 2.6 billion in revenue. That's our projections for next year. I still think right now, I'm not buying it right now. Now, granted, is it going to go back to 15? Like, I'm buying little bits for like 10, 20 shares here, but like real, like 1,000 shares, 500 shares. I'm not doing that yet. Does it go back to 15? I don't think so. Because I think the market has decided to give it a premium, and they're going to stay with that premium unless, the S&P, which is at basically all-time highs right now, comes down. So I don't think it's a horrible buy, but I definitely don't think you can justify, and Coach Rep said this on the podcast a couple weeks ago, like, you can't justify this multiple with the growth. And none of the Palantir, a lot of the Palantir bulls on Twitter don't want to hear that, right? And this goes to Matt's point all the time. It's like a lot of these bulls that are hating all these other stocks like SoFi and PayPal and those, they don't want to hear the fact that Palantir at $16, $17, $18 does not have the fucking growth to justify the valuation. It's just that simple. It doesn't. Does that mean it's a horrible buy? No, because for the long term is the long term, but it doesn't mean it's the best valuation. So to me, 15 and under is better. I just don't know if we'll get there. So I do think it's overvalued right now, technically.
But don't you think it's taking out the risk that we're going sideways?
Yeah, and Arnie says that a good bit, right? Like, Arnie states that, as it grows and the price stays flat, that it's growing into its valuation a little bit. And I think that we're going to see times where it peaks and troughs, right? I still think that, depending on what happens at the end of the month, I still think that we might see another 5 to 10% pullback in the broader market. Maybe not 10%, but 5% pullback in the broader market, just because I think people are still anticipating that March cuts are on the table. I'm just not there yet. And so with that, I think there's going to be a little bit more of an adjustment on the valuation of the broader market. And so I think we could get back to 15, but after 1Q earnings, I think it's going to be very tough. And you might see spots of going below, say, a $15, $16, but it's going to be rare and few and far between. So I think it's just going to be one of those companies that the hype is real. You have a lot of people buying into it now because I think of what has happened in Ukraine and what has transpired in Israel, and the fact that people understand that this is a company that puts America first. And yes, they might not agree a whole 100% with, say, the left politics that, say, Google, Facebook, and maybe some of the other social media sort of companies or big tech companies put out there. But at the end of the day, it's not like they're trying to hurt anybody. They're just literally trying to make sure that America stays solvent and America stays in the winning pace that we have been in quite some time. So I think it's always going to kind of trade at this premium unless something kind of crazy happens, like some big announcement, or I don't know, CARP unfortunately passes, or there's some sort of internal feud with some of the founders or something like that. But I think it's always going to trade at some sort of premium. But I think after 1Q, I'll be pleasantly surprised, and I'm very curious. Not after 1Q, I'm sorry. Once we get to the February timeframe and we get the full year 23 earnings, I'm very curious to see what they forecast for fiscal year 24. And who knows? Maybe they'll give a good raise. I guess we're going to close in on 625 million a quarter, right, Amit? Because I guess for a run rate of getting close to 2.6 for the year, you're going to have to start growing over 6 and climbing towards 650. Because 650 would get you on a flat basis. 650 for the year would get you to the 2.6.
Grogu says it's growth without any debt. No, I agree with that, but dude, we got to have top line growth as a SaaS. Like, we cannot be below 20% growth. I don't. There's just no argument for the growth. And this is not me saying it, because let's take me out of it. Let's take the one we all look up to, which is CodeStrap, who
Mid doesn't know anything. CodeStrap is Code Daddy.
Yeah,
he's the man.
Dude, CodeStrap is Code Daddy. When he's concerned about the growth publicly, and on the podcast, when he's talking to us saying, like, how the fuck are we justifying this multiple by any sense of the imagination? Those are his exact words. Like, no, it's not just debt. No debt is not like.
Can you do me a favor?
Like,
please do me a favor. Can we get Code Daddy to catch on? We gotta get that to catch on.
Oh, we gotta get the Code Daddy, of course. Code Daddy
to get us.
So Gandalf is dead.
Gandalf.
Grogu says, I get that, but the client growth is there in commercial. No, it's not, dude. The client growth is not there. Client growth was 13%, 11%, 10%, 9%, 7%. The last 2 quarters, it finally went up to 8%. And then last quarter, it was stuck at 8%. It didn't even accelerate. Yeah. So the client growth is not there at all, in my opinion. Yeah, I mean, like, year over year, you might say it's there, but it's definitely not enough to be justifying massive levels of growth. Like, it needs to get to 20, 30% per quarter sequentially if we want to get anywhere near, the $4.5 billion target that CARP set in 2021, which would get us at 30%.
But I want to ask you another question. So the Q4 earnings is coming out. And if on the Q4 earnings, because we haven't really seen the results from AIP, we don't know their guidance, they're actually surprising on the adjusted margin. I was looking at the numbers, and Q3, I believe they were 27% on the adjusted margin, and Q2, and Q3 they were 31% on the adjusted margin from operations, which is like 31% cash flow from operations, which is a crazy number. And I actually was playing a little bit with my Excel with the valuation, and it makes a huge change if you have 25% cash flow or 31% cash flow on the valuation. I was surprised how much of a change that makes. So what if they come out and the customers are reaccelerating, growth is reaccelerating, and everything is looking good in the business, and the stock shoots up to, I don't know, 22, 24 in this range, then we would be saying that, oh shit, why didn't we buy at 16? It was really, really cheap, but it's impossible to know now, right?
Mm-hmm. Yeah, I mean, I see what you're saying, right? Because on a fiscal year 24 basis, right, if you were to say you're going to get 2.65 billion in revenue and you get a 31% adjusted cash flow, you're going to end up with about 800 to 900 million dollars in kind of cash flow from operations that's going to the bottom line. And that's pure cash that's coming into the business, right? That doesn't account for share-based compensation. So on a net income basis, you have to subtract 400 out from that, 400 million out from that. But let's just talk on a cash flow basis. Then if you're just looking at it, it's like, okay, well, it's a $32 billion company right now. Divide that by the 0.825 or whatever that you're getting. You're under a 40 X for price to cash flow from operations.
Yeah.
So if you're growing at a 20% rate, I could see where that's okay. Below 20%, I think you're going to be hard pressed. But even if you're not growing very fast, that's on the upper echelon of cash flow from operations, in my opinion. But I'm fairly confident that we're going to continue to grow at a 15 to 20% rate. So in that respect, I mean, if you think about it in that respect, you go from 2.65 next year, and then you add another 15%, and you do 31% of that again, you're at close to $1 billion, right? Because you think you're still going to get interest rate income off of the cash balance as well, which is going to be $150 million a year. So you're talking about over $1 billion of sort of cash flow coming into the business at that point. It won't take much. It won't take much growth, 15, 20% for several years for this thing to start looking cheap. But whether or not what you want to pay up for, say, 30x price to cash flow from operations based off of, say, 2025, 2026, 2027, that's where the question kind of comes in. I'm very confident that this will be a $10 billion revenue company. In that respect, it's going to be making $3 billion to $4 billion in cash flow from operations, because I anticipate the cash flow margin to actually continue to increase as we get above this kind of break-even area that we're in right now. So I anticipate it goes to 35, 40% in the future. But let's just say 30% for now. If you're making $10 billion of revenue, you're making $3 billion in cash flow from operations. I mean, put a 25, 30x multiple on that, this thing could easily be a $75 billion company. But the problem is you're already starting off at a $35 billion base, right? Which is where we're at today. So that's kind of tough.
That's the tough part.
That's the tough part.
You got 2 billion shares outstanding. Grogu says the best is that the clients that they onboard now are the ones that will add the revenue. The fact that they also don't have any debt is what makes this more appealing. I agree. The no debt is very appealing. The bet is that the clients that they add now will truly create that additional revenue from like 2.9 million a year, hopefully to 3.9 million a year in terms of average spend. But that's where AIP has to come in terms of monetization. And it is being monetized. CodeStrap confirmed that. But how much, right?
Code Daddy.
Yeah. That's Gandalf.
Code Daddy.
Yeah.
When because you've looked at the numbers, when do you think buybacks will actually come into a big part of the bottom line for?
I think until we get back to 30% year-over-year growth, Palantir has no business doing buybacks because the stock is always going to be overvalued conventionally until we get there. If we somehow fall below 13, I don't think it's the worst thing in the world. But that would just have to be a tough macro event, which is very possible if like the macro just goes to shit over the next couple months. Assuming that doesn't happen, get the treasury income off that as long as rates are high. Until that operating income margin, as you're saying as well, which is I think at 36%, gets better and better, and we actually have business from income from operations that's substantial, so that we don't need the 40 million to produce the EPS that we need to show accelerating profit growth in terms of GAAP profitability. Then we need the 1 billion in the treasuries, because if we don't have it in the treasuries, like the buybacks aren't going to do shit. We already have so many people willing to buy back the stock. This is the most liquid. This is one of the most liquid stocks. Early. I mean, this is fucking Niagara Falls in terms of liquidity, right? Like people are ready to buy Palantir. They don't need to reduce the float if there's so much. I mean, people were willing to buy it at $21.80. They were just willing to buy it. So
yeah, I think to give people some color. So we're still at like $450 million a year in stock-based compensation. So we're still going to dilute about 1 to 2% per annum in terms of the share float. And so the thought process is like we're just getting to a place now where we're above $400 to $450 million a year in cash flow from operations. So I feel like you really need to get to a place where you're at closer to $1 billion a year in cash flow from operations. So like fiscal year 25, 26, once you really get that, cash flow from operations ahead of you, and then you can start to steadily maybe do like 10, 15% of your ops cash buybacks per annum. And that I think would be okay, because at that point, $400 million, yes, it's a big chunk of your cash flow, but at the same time, like if you were to start doing it now, you're talking about eating like 80% of your ops cash that you're making. That's just not prudent investing at the moment. So I'm curious to see where it ends up, but think about when we get to a place where we are making $10 billion of revenue a year, $3 to $4 billion in ops cash per annum, plus whatever interest income we get off the balance sheet. Like, how much you could be doing $1 billion of buybacks per annum, right?
Yeah.
And buying back 3-4% of the float at today's prices. Now, of course, if you're down the road, it'll be a little bit different, but that'll be useful. That'll help. Anyway.
All right. I think that's it. That is us. That's done for today. Fun discussion. We'll see what happens next week. Obviously, the JP Morgan Health Conference was this week. That's why we got a bunch of healthcare partnerships. A lot of Israel stuff is this stuff that was that big highlight of the week in terms of news. TJ says, why can't Palantir do more with that cash? I mean, anything more than the, 5% they're getting in 3 months, I don't know what they would do. I mean, they could do Bitcoin, but that's a little risky given what we see what's happening. And they can't put it into startups or SPACs. Yeah, but they already did that, and it was a shit show, right? So 5% to do nothing is not horrible.
And I'm pretty surprised that they approved the share buyback, but they never ended up buying shares. So I think that when they actually do end up buying back the shares, it's going to be a very, very bullish sign for us investors.
Agreed.
Because
yeah, and I think they are going to get to the place where they might do a venture capital arm, but I think the SPAC thing was too premature, right? I think it was just too much of a flavor of the day, and they weren't in a place yet where they have excess capital to make these sort of big bet returns, right? Because they spent, I forget how many hundreds of millions of dollars. I mean, when they were buying into some of these companies, they were buying $100 million, $200 million of like equity partnerships within some of these things. And it was like, they didn't have really the cash flow to be able to sustain something like that. So it was a little early. So if you're 2-3 years down the road, I could see where you spend $100 million, $200 million per annum trying to maybe put up an incubator or something like that. But it's kind of early. We'll see.
All right. That's it for us. Thank you, everybody, for being here. We'll see you next week. Rocket Lab Weekly. Check out Matt Money and Vince's channel. Will be in the description, and their Twitters as well. Make sure you follow those, and we will see you next week in the world of Palantir.
Thank you, guys.
Bye, everybody. Have a good weekend. Good night.